Good morning. You're watching Market Cafe with me, Shreyansi Singh and Snehi Shah on ET Now. Over the next 1 hour, we'll take you through news and updates within the country and across the globe. Good morning, Snehi.
Good morning, Jen.
How's the handover looking like for the US markets?
Well, US markets, we're seeing a rather good set of numbers coming in when it comes to the major moves on the indices. Good morning to all our viewers as well. Let me take you through what the global handover looks like, and let me start with the US markets. Now, US stock futures ticked higher on Tuesday night as investors await the Fed Reserve's latest policy decision. We also had the CPI data come out, and retail inflation has come in at 3.1% for November, which is slightly lower than what was reported in October. We'll also touch upon this later in the show as well. And investors are coming off a fourth straight positive session for the major averages. Now, during the regular trading session on Tuesday, the S&P 500 gained almost 0.5%. The Dow added 0.5% as well, and both indices hit their highest intraday level since January 2022. Nasdaq also reached its highest level since April of last year, closing with a jump of 0.7%. Now, these gains are coming as traders brace for the conclusion of the final Fed meeting this year. The central bank is widely anticipated to hold the benchmark overnight borrowing rate steady in the 5.25 to 5.5% range, but investors will also pass through Fed Chair Jerome Powell's commentary for clues into how soon rate cuts can be expected. But that's a scenario that Powell may choose to push back on, especially as yields are coming off their highs and they're doing less of the Fed's work to cool the economy. Now, the 10-year Treasury yield last hovered around that 4.19%, very close to the 4.2% mark, despite topping that 5% in October. So, well, yields have cooled down moderately as well. And investors will also be keeping an eye out on November Producer Price Index. That data point is set to release ahead of the Fed's decision tonight. So, well, we're getting some key data coming out of US. All eyes will be on the FOMC meet. So, let's see what happens in that meet. Rates are largely expected to hold steady. Shifting focus to European markets. European markets fell on Tuesday as the global investors digested the latest US inflation reading and at the start of the Fed Reserve policy meeting as well. Now, the European stock 600 provisionally closed with a downtick of 0.2%. Oil and gas was the major sector that led losses down almost 1.3%. Then you had European indices like FTSE, DAX and CAC. All were nominally down in trade. Not much happening over there as we speak. And well, this is the handover coming in from Wall Street as well as the European markets. But with that, Shreyansi, also take us through what oil has done, because we did see some sharp moves in oil as well.
Absolutely. So the market largely shrugged off the latest inflation data, but cannot say the same about oil at all. Because when you look at US crude oil, that dropped nearly 4%, and this was, of course, as inflation data stoked anxiety among traders that the Federal Reserve may not be ready to sort of ease up on interest rates. Now, when you look at the WTI, that lost around 3.8% and settled around that $68 a barrel mark. Now, when you look at Brent, that also shed around 3.67%. Oil prices are falling as record production in the US, Canada and Brazil collide with a weakening economy in China, raising concerns among traders that the market is oversupplied. Now, several OPEC members and their allies, such as Russia, have promised to cut supply by 2.2 million barrels per day in the first quarter of 2024. Now, traders, however, are skeptical that the group will deliver on those cuts. Now, gold prices, on the other hand, also paired gains on news that US consumer prices rose unexpectedly in November, while traders focused on key central bank policy meetings for clues on monetary policy. Now, lower interest rates tend to support zero-yielding gold. Meanwhile, the yield on the 10-year Treasury was lower by 3 basis points, around that 4.2% mark, but still trading near the 4.2% level as well.
Shreyansi. So, well, lots of factors to keep your eye out on, but let's also look at all the important events that you have to track today. And let's start by looking at things happening back home. And well, the November trade data will be out today, so keep an eye out on that. Shifting focus to the US, the November monthly budget statement as well as the producer price index PPI data, like we mentioned earlier, will be out. Of course, all eyes will be on the US FOMC rate decision as well. UK then industrial production as well as the Eurozone industrial production, both of these will be out today as well, so keep an eye out on that. Shifting focus back home into the primary markets, then you've got two new IPOs that will be opening for subscription today. That is DOMS Industries as well as India Shelter Finance. So keep an eye out on both of these IPOs as well. When it comes to corporate action, then you've got Mastech. The board is going to meet to consider issue of equity shares today. Our systems will also be meeting to consider interim dividend today. And well, it's the last day to buy shares for Hind Zinc, which is Hindustan Zinc, to be eligible their dividend, as well as you've got IRFC that will be in focus because they will be raising up to 3,000 crores via 10-year bonds today. So well, keep an eye out on all of these counters as well.
In the US, retail inflation has come in at 3.1% for November, which is slightly lower than the 3.2% reported in October. The core US inflation that bars food and energy prices came in at 4% year-on-year. What we still have to keep an eye on is the FOMC meet, which is scheduled tomorrow. We will have to see how the Fed interprets this inflation data in their interest rate decision.
Well, and all eyes are on the US inflation and the FOMC meet outcomes slated for tonight, as investors are expecting rates to remain unchanged for the third straight time and are expecting that the Fed might hint towards a soft tightening bias. Let's also see what brokerages are saying. And well, you've got Nomura that's saying that the dot plot may signal 3 rate cuts in 2024. They're saying that this meet may hold rates steady at 5.2 to 5.5% and may see a significant dovish shift. This is what Nomura is saying. Let's also see what Morgan Stanley is saying, and they're saying that extended hold until first rate cut in June of 2024. So they're seeing a rate cut coming in June of next year. They're saying that the current rates are the peak of tightening cycle. This is what Morgan Stanley is saying, and they're also saying that they expect little change in the statement coming in from the Fed chair as well. So well, this is what Nomura and Morgan Stanley are flagging off when it comes to the FOMC meet outcome later today.
And US President Joe Biden appeared to offer his harshest criticism against Netanyahu, as he says that they have started to lose the support of the international community as they continue bombardments in Gaza. He also further added that he needs to change his hardline government stance. However, the US once again voted against a ceasefire, even as 153 nations voted in favor of the resolution in the United Nations. The death toll in Gaza has now neared 18,500.
Well, and after a scathing backlash, Zara has issued an apology stating that the campaign, conceived in July and photographed in September, was never meant to offend anybody. The controversy revolves around Zara's recent advertising campaign titled The Jacket, which showcased images that strikingly evoked the grim aftermath of the conflict in Gaza. Mannequins with missing limbs and statues shrouded in white sheets, intended to highlight Zara's new jacket collection, mirrored the haunting visuals of casualties in war-torn areas. Zara has pulled down the contentious images from its website as well as the app.
Shifting focus then, the wait is finally over because Netflix has unveiled viewership statistics of nearly all of its shows and movies. What We Watched report. The data reveals that blockbuster series like Stranger Things and The Witcher have amassed millions of viewers, while season 1 of The Night Agent was its most viewed show during the past 6 months, garnering 812 million viewing hours. Netflix will release updated reports every 6 months.
Well, that's some interesting news coming in from Netflix, but Google has also released the list of what India Googled the most in 2023. The most famous people and major events that were searched on Google, from Chandrayaan-3 to the G20 summit to movies and World Cup. Well, the list is very long. My colleague Sumita is here to tell us more about all of these interesting details. Sumita, over to you.
It's almost the end of 2023, and what a year it's been. A funding winter for startups, 2 wars raging, earthquakes, and a year where cinema finally found itself roaring back to success. And who can forget Barbenheimer? But the question is, did these events make it to Google's top searches of 2023? Well, let's find out. Globally, the ongoing Israel-Hamas war topped news trends in 2023. In the movies section, along expected lines, Barbie and Oppenheimer took the top 2 spots. In fact, India's Jawan movie as well made it on the 3rd spot as far as that list is concerned. In India, it was the most searched movie. Speaking of other India trends, well, Chandrayaan-3 was the most searched news event, followed by Karnataka results, where Congress made a comeback. So it was one of the most searched topics. In fact, under the category What Is, G20 was the most searched term, meaning that most people were searching for what G20 was. And along with G20, UCC and ChatGPT were also the others on that list. So fair bit of tech influence was seen in the Near Me section as well, where most people searched for coding classes, meaning coding classes near me. And of course, in the sports category, well, IPL was the most searched event, while actress Kiara Advani was the most searched in the people category. And so far as shows are concerned, well, the most searched show was Farzi.
Well, stay with us for now, Sumita. India is the lead chair of the Global Partnership on AI Summit this year, and the 3-day event has kick-started in the capital city, New Delhi, with partner nations and experts in attendance. So tell us a little more about that as well.
Promise, potential and perils of AI. Well, those are the core agendas at the ongoing Partnership on AI Summit that's currently underway in New Delhi. Today was day 1. AI is taking giant leaps, and hence it's important for global policymakers to establish guardrails around it. Policymakers, brands like Meta, Microsoft, Google, OpenAI took part in several sessions. India's stance has been to responsibly and safely develop AI in a manner that doesn't really demonize it, something that was echoed in the Prime Minister's address just a short while back, wherein the Prime Minister stated that India is committed to ethical and responsible use of AI. The journey of AI development has to be inclusive. In fact, he also said that for any system to be sustainable, it has to be trusted and has to be transparent, and the onus completely lies on companies and governments. Data and algorithms have to be free from bias. Upskilling and reskilling also has to be part of the AI growth curve. And something that he reiterated at this summit as well, something that he said at G20, that it's critical for leaders to come together. So remember, Paytm's Vijay Shekhar Sharma as well spoke this morning saying that AI could be leveraged in education, healthcare services. Now, it's important to note that India is looking at managing a consensus amongst participating nations akin to its G20 diplomatic coup, where it managed a consensus on the Russia-Ukraine issue. So the current themes at GPAI are around climate change, but India is really looking to push AI in agriculture and secondly on democratizing AI. This summit, remember, is also happening at a time when the European Union just passed the AI Act, including safeguards. In fact, in November itself, the UK hosted the AI Safety Summit as well. So now how India really manages to cement its place in the global AI arms race, and how it really manages to shape the policy, the agenda around regulating AI globally, is something that will be interesting to look out for.
आज भारत AI टैलेंट और AI से जुड़े न्यू आइडियाज का सबसे प्रमुख प्लेयर है। भारत AI के रिस्पॉन्सिबल और एथिकल यूज के लिए भी पूरी तरह कमिटेड है। हमने नेशनल प्रोग्राम ऑन आर्टिफिशियल इंटेलिजेंस शुरू किया है। हम भारत में AI मिशन भी लॉन्च करने जा रहे हैं। इस मिशन का लक्ष्य भारत में AI कंप्यूट पावर की पर्याप्त क्षमता स्थापित करना है। इससे भारत के स्टार्टअप्स और इनोवेटर्स को और बेहतर सुविधाएं मिलेगी। इस मिशन के तहत एग्रीकल्चर, हेल्थ केयर, एजुकेशन जैसे सेक्टर्स में AI एप्लीकेशंस को प्रमोट किया जाएगा।
Well, that's the word coming in from PM Modi, but it seems as though US President Joe Biden will not be the chief guest at India's Republic Day celebrations next month. This is as per media reports, which suggest that the USA's head of state is unlikely to attend the celebrations. My colleague Srinjoy Chaudhary of the Times Network has more on this. Srinjoy.
There had been considerable speculation about a Quad summit in January in India, perhaps around Republic Day. And then the President of America, the Prime Ministers of Japan and Australia would join Prime Minister Narendra Modi for the Quad summit. Now we are hearing that despite their best intentions, it's probably not going to happen because it's going to be difficult for the Americans, it's going to be difficult for the Australians, and as a result, while the Quad Summit will happen probably later in the year, it will not be in January, and you will not expect President Biden, at least in January. The issue, of course, is that right after that, you'll be going into election mode. And as a result, the Quad Summit could get well postponed to perhaps the second half of the year.
Well, thanks to Enjoy for that update. Now, when you have the biggest names of India Inc. converging at one event, you're bound to ask the simple question: is there a consensus view on how the Indian growth story will pan out from here? And what will lead the charge, in fact? Now, energy transition, digitization, the use of new technology like AI. Well, we got a whole lot of opinions and views when the biggest voices of India Inc. descended and converged at the Economic Times Awards jury event, where they have been brainstorming on this year's nominations and candidates. At that event, we had the CEO roundtable as well, where they spoke and discussed matters related to Indian growth. The Tata Sons chairman, N. Chandrasekaran, Chandra like we know him, spoke on how India is witnessing an upsurge in advanced manufacturing and what he believes is the biggest differentiator for any economy. Meanwhile, Uday Kotak also spoke about why he expects volatile interest rates in the near future. We also caught up with several big voices of India Inc. who were present there, and this is what we came away with.
Yeah, I mean, it's a very exciting moment in India. I think confidence is very high and growth opportunity is enormous. Whether it is the manufacturing sector, services sector, domestic sector, export sector, there are enormous opportunities. So it's an exciting time.
From an Indian point of view, I think we have to assume, give or take, the current next year. Of course, the question is when interest rates come down. But we got to be clear that even if Indian inflation moves to, say, sustainably around 4%, which is the target of our system, a interest rate regime of repo rates between 5 and 6% at least is looking the foreseeable future on the lower side. Of course, if there are surprises, current rate, of course, is 6.5. Who knows? It could be higher. But I don't think businesses should be really planning on the basis that the base Reserve Bank repo rate is going to be below 5% in the foreseeable future or the next few years in terms of your planning, and from the current 6.5. And on the higher side, subject to what happens. I think the key issue for India is, I think 100, 200 basis points interest rate is something which we have to take it in our stride as the volatility. The key issue for India is capacity. How are we going to create capacity at scale? And I'm glad we're growing at 7% this year based on the estimates. So most people believe 6 to 7% is the growth rate, which is what we can sustain. But what India needs is 9%.
Well, you said it. I think the industry is in an upcycle and the rates are increasing because the occupancies are running in most of the important locations at close to 80%, whether it's high 70s or early 80s, like in Goa, like in Mumbai. So I think all in all, the demand continues to outpace supply. I see no reason of that slowing down because suddenly the supply side cannot come in with a lot of new supply. So the fundamentals are good. And what the sector has done is it has been able to streamline costs when the revenues went to zero during the COVID time. So I think all in all, good outlook for the sector.
Look, I'm incredibly excited about the tech sector for the future, right? India today employs about 5.4 million people in the industry. I think that number can double in less than 10 years. And so I'm incredibly excited, one. Two is I think India has really established itself as a talent destination. And talent is a core ingredient of the tech and tech-enabled services world. And so I think if we play our cards right, we can really, really dominate that space in the future. The one thing we've got to focus on and really invest in is how do we skill relevantly, how do we upskill so we move up the value chain consistently. And I think there's great collaboration between industry, between association, between academia, and between government to take that agenda forward. So I'm incredibly optimistic, and I'm not an optimistic person by DNA. I'm much more of a balanced person, but I remain very hopeful. So
I think the entire country has been trying very hard to increase participation in the corporate bond market, and the face value, which was 10 lakh rupees, got reduced to 1 lakh rupees. But I think even 1 lakh rupees was quite high for if you're trying to attract retail investors. So I think 10,000 rupees will make a big difference. I think on the other side, we also need to find a way to nudge corporates to come and do issues at 10,000 rupees, right? Because I think corporates should look at having retail investors as your bond holders as an opportunity to also kind of build on the brand in a sense.
And do you think the current infrastructure we have for the bond market, that will be adequate to handle retail participation? We have a very good world-class infrastructure for equities, but do you think that we can scale up for the bond market so that more retail investors can come?
No, absolutely. As in, bond trading can happen on the exchange platform. And I think SEBI has already, put a bunch of things in place over the last 1-2 years, with the regulations around online bond platforms. So we have everything in place, and we have, suddenly, the market's also grown in terms of retail investor participation. We're looking at newer products. So I think everything is in place,
Luckily for us, India is at a very sweet spot where the economy is doing well, inflation is fairly in control, there's a strong government at the top. So if you look at all the macro factors, it's in our favor, while in the world there is a fair amount of turmoil going on. So, you may say we are Andho mein Khana Raja or whatever it is, but we are doing well, and I'm so proud and happy about it.
Yeah, I think it's the best that we have seen for the Indian economy. But talk to me about which sectors or themes you think will work out better. I mean, the last decade or last 2 decades was all about software and IT. And these days, it's been a lot about manufacturing as well. That has been picking up. Make in India, all the policy push. Do you think the next decade or 2 decades will belong to manufacturing sector?
I sincerely believe that though the service sector, including the IT sector, will do well, but India is going to become the manufacturing cradle of the world. I sincerely believe the China Plus One policy will bear a lot of fruit in the near future, and is already happening. We will soon become a very large manufacturing place for electronics, semiconductors. So there's a lot happening in the manufacturing sector with the PLI and other initiatives by the government.
Well, that's a whole host of exclusive prominent voices coming in from the ET Awards jury meet. And well, with that, let's slip into a very short break, but you don't go anywhere, because when we return, we'll take stock of how the Asian markets have opened up this morning, so stay tuned. Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. This is ET Now. Let's quickly take a look at what the Asia Pacific markets are doing as we speak. And well, they're largely mixed as we speak, as investors are assessing the quarterly Tankan survey from Japan, and this is ahead of the interest rate decision from the US Fed Reserve as well. Let's take a look at Nikkei, because Nikkei is the one that's rallying and leading all the gains in the Asian markets, up 167 points, up 0.5%. Now the Tankan survey, let's talk a little bit more about it. It's compiled by the Bank of Japan quarterly. It measures the economic conditions in Japan. Now, business confidence at big Japanese manufacturers improved more than expected in the fourth quarter, with the index climbing to a +12 from a +9 a quarter ago. Meanwhile, the index for big non-manufacturer sentiment rose to +30 from a +27 mark, improving for the 7th quarter in a row. Now, positive index reading indicates optimistic respondents outnumbering the pessimistic ones. So, well, these are some strong numbers coming in from Japan. On the back of that, you can see Nikkei comfortably in the green as we speak. Shifting focus to Australia, let's see what ASX 200 is doing as of now. It started with an uptick of 0.3%, still holding on to those gains, and it's extending into its 4 months highs as well. Shifting focus, let's see what Hang Seng and Shanghai are doing. And Hang Seng, well, Hang Seng's in the red, 103-point downtick coming in for Hang Seng. Shanghai also in the red, 14-point cut coming in for Shanghai, almost 0.5% down. And lastly, also Kospi is also 0.3% down as we speak. Shifting focus back home, we managed to close just above the 20,900 mark yesterday, and implied open at 21,065. So, well, Shayansi, let's see how it pans out for us.
Absolutely. So with this, let's also Srinivasan, who's the MD at Kotak Alternate Assets, listen in.
Well, India is a capital-starved country. The banking system in India still lacks the capacity to meet the credit demands of the market, whether it is, small enterprises or large enterprises. And the current banking regulations also prohibit the banks from providing financings for certain kinds of transactions. All of that has to be addressed by the private credit industry in India. So our submission is that there is a massive opportunity in the private credit space across different return spectrums. Obviously, there are high risk, high return strategies and low risk, low return strategies.
At the moment, if you can quantify the size of the private credit market in India, what would that be?
It's hard to sort of put a number in terms of the volume of AIFs that has been raised. But overall, I would say on an annual basis, private credit across the return spectrum of 14 to let's say 22%, the market has the capacity to absorb at least a couple of $1 billion a year.
Well, and my colleague Anisha also caught up with the top slew of economists and market voices from the Economic Times CEO 2023 roundtable. Listen into a whole host of those conversations.
No, I think the overall the environment is definitely positive. In India, we should all feel fortunate, and it got validated by listening to everybody here. We are at the right time, at the right place. Of course, the world is facing many challenges on the geopolitical front. There are all kinds of disruptions, but the opportunity for India with the demographics, with the demand, with the digitalization particularly that I think everybody talked about, I think there are tremendous opportunities in India, and everybody feels very positive that we are at a time when almost everybody in India is feeling very confident about the future, and our policy prudence and the agile execution has kept us in good stead over the last several years, and we feel very optimistic about the future.
I think India is particularly well placed in this VUCA world that we're in, with great policy, great enabling infrastructure. For me, because I'm in the agricultural sector, I'm particularly optimistic. We see digitally connected farmers, very high on knowledge. We see an alignment between what government and corporates and NGOs are doing. So I think the time is really ripe for an ag-tech-based, R&D, innovation-based second green revolution. So that would give India more prosperity, more per capita income, and a much more inclusive growth story.
Yeah, I think we seem to be a kind of an oasis in terms of all of the turmoil that's going on, both geopolitical and economically. And I think we're in pretty good shape. I think we are standing out as an economy that is obviously proving that domestic opportunities are huge, domestic demand is huge, domestic investment large, although driven by government, but the opportunity is huge. So everything is in a way solid and domestic, which I think with the reforms being done and the overall execution, India has done well. Again, although I really believe driven by government expenditure, but that's fine. So that's one part of it. I think the second is that systematically the digitization in the economy, in just so many ways, I mean, why repeat it, is just formalizing the economy to such an extent that it's creating financial inclusion, it's creating efficiencies, it's creating productivity. So all of those factors are sort of kicking in.
No, it will definitely help, but I don't think it will be a material game changer. See, things are moving towards bond market in all positive. All the tax arbitrage has gone away. So I think bond market per se has the balance. But then when you have such a high growth trajectory, to get people into fixed income at this levels, particularly when your equity market is looking very optimistic, it may take some time, but it definitely will help once we get digitalized into bond platforms and stuff like that.
There's a word coming in from the top honchos of India Inc. Let's talk about the inflation scenario then. We got data yesterday, and according to it, retail inflation in India for the month of November has risen to 5.5%. This is, of course, higher than 4.9% that was recorded for retail inflation in the month of October. Then the food price inflation has also stayed sticky at 8.7%. This is expected by the RBI at the last MPC meeting, but it's in core inflation that we've seen some respite coming in. Now, core inflation does not account for food and fuel prices, and this time for the month of November, core inflation was clocked in at about 4.1%. Now then you have industrial production. So let's take a look at that also. That has gone up to a 16-month high. For the month of October, it still stands at 11.7%. In the same month last year, it was 4.1%. Now IIP for September has been revised to 6.2% from what was earlier reported at 5.8%. Let's also take a look at what Morgan Stanley has to say about it. Now, what they're saying is that CPI rose to 5.6% on a year-on-year basis in November. In terms of core CPI, they're talking about a moderation to 4.1%, so further moderation coming in on that front. In terms of core inflation, they're saying that that has softened to a 44-month low. And they're also saying that CPI will track above 6% in December, so key forecast coming in from Morgan Stanley there. And they're also saying that they expect a shallow rate cut cycle of about 50 basis points from June 2024. So this is the word coming in from Morgan Stanley as well.
Well, that's a roundup of India's inflation data, but let's get a move on then. And coal stocks, which are essential for power production, are at comfortable levels in the country, with stocks at thermal power plants standing at 28 million tons. Now, speaking to ET Now's Sumit Chaturvedi in an exclusive interaction at the Deloitte Arohan Government Summit, Coal Secretary Amrit Lal Meena also said that the capital expenditure at Coal India will be as per targets this year. Listen in.
Current stock availability is quite comfortable. As far as overall stock position at the pit head and the thermal power plant head is concerned, it's about 83 million ton, which is about 17% of the corresponding stock last year. And the stock at thermal power plant end is about 28 million ton, which is comfortable stock.
And what is the latest on the strategy to enhance coal production? What is the latest strategy there?
Opening up of the new mines, expanding the capacities, the commercial auction of the coal blocks is the latest strategy, under which 7 rounds have been taken up in last 3 years. 91 mines have been successfully auctioned. 8th round is ongoing at the moment. And then of course captive mines were also allocated. So captive and commercial taken together is about 500 million ton peak rated capacity. Their contribution last year has been about 14% of the total production, and every year it is proposed to go up. So both PSUs and the captive and the commercial mine, all of them will contribute to meet our requirement.
So one thing on Coal India, because you're nodal ministry for that, they've said the capital expenditure is up 0.6% in the first 8 months of the year. You think this year capital expenditure is going to be at the target, or it's going to?
Capital expenditure of Coal India Limited will be as per the target. It's about Coal India, Neyveli Lignite and Singareni Coal Company, all three taken together, we will be incurring an expenditure of about 21,000 crore.
Well, with this, we're timed out on this segment, but we'll see you with more news and updates on the other side.
Hi there, welcome back, and let's talk about a counter that's going to be in focus today, and that's going to be ITC, because it conducted its analyst meet yesterday. So let me go across to Winnie to find out what the key takeaways of this meet are. Winnie, good morning. Take it away.
Yes, absolutely. So in terms of key takeaways that have come in from ITC as analyst day is one, in terms of urban growth, yes, that continues to do better than the rural growth. Rural growth surely seeing some signs of a recovery and green shoot coming in. But yes, in Q3, maybe some pressure and stress could continue. That's not as much of an impactful recovery that they're seeing in rural. That's the highlight coming in there. Other than that, premium products, that's seeing a good and a better traction and better demand versus a mass product as well. That continues to do comparatively better. So premium end and premiumization trend still continues, is the word coming in there. ITC said that they will be open to M&As based on opportunities in the FMCG segment as well. Focus on driving growth mainly in the beverage, frozen food, liquid wash, etc. These are the trends that are in the emerging business, which they'll be focusing on as well. Management believes that they will be able to get that 80 to 100 basis point YOY margin expansion, and that is to come in from here on a steady basis going forward as well. Premiumization will be the key focus area for them in the personal care segment as well, and focus will be on driving value-added products in the paperboard business as well. Other than that, we have brokerage notes coming in from Investec as well. They're maintaining a buy. Target price of 499 rupees per share. They believe leveraging capabilities is something that will be driving the growth for ITC as well, and they prefer ITC over an HUL as well. Other than that, Jefferies too maintaining a buy on ITC as well, and 530 is the target price that they've given. They believe that overall management is hoping for a stable tax environment regime coming in for the cigarette side, which would work out well for the cigarette business of the company as well. So that's how ITC's roundup is looking from the analyst day meet.
Well, thanks, Vinny, for that update on ITC. But consumer durable channel checks also suggest that growth in Q3 has been better than past quarters due to festive season spillover. So help us put that into perspective as well.
So absolutely, according to consumer durables channel checks that's done by Nuvama, there were key takeaways that came in was that Q3 FY24 surely in terms of growth will be better than the past quarters as well, past years Q3 as well, given that the festive season actually came in Q3 versus a Q2. So Q2 versus Q3 is going to be better over there. Now electrical segment, specifically the fans, the growth has been quite healthy over there. There is some polarization within the companies as well. Crompton and Attenberg have done quite well, and others seem to be lagging as well. Now in terms of the cable segment, the growth continues to be very strong over there. Wires also saw a very good growth as well. So companies like Polycab, KE are going to be in focus as well. And AC segment, that's the growth that has seen a double-digit growth there. Further market share gains were seen by Lloyds, Voltas, that have managed to do well in Q3. And pricing action in some regions is something that we are keeping an eye out on. Lighting segment in the consumer electrical side, as volume growth is expected to be by 7 to 8% in plus in Q3 as well, and but 18 to 20% pricing decline due to the driver on-board technology. That is something that is continuing in the lighting segment. So let's keep an eye out on this channel check that we've gotten from Nuvama on the consumer durable side.
Absolutely, Winnie. Thanks for taking us through that. We will be keeping an eye out on consumer durable counters as well. But let's talk about primary markets. And along with DOMS, you've got India Shelter that will be opening for subscription today. Now, they have raised more than 360 crore rupees from anchor investors on December 12, which is yesterday. My colleague Gaurav is joining in with all the details. Gaurav, good morning. Take it away and tell us more about this IPO.
Good morning. So as we all know that this India Shelter is coming up, and the IPO price is going to be, the issue size is going to be 1200 crores, out of which the fresh issue will be for 800 crore rupees. Now if you look at the India Shelter's CET1 ratio, now it is already at 47%, and this 800 crores of the fresh issue will again strengthen this position for the India Shelter for its growth in the business. So the IPO subscription date is starting from today and it will end on 15 December, and the price band is going to be in the range of 469 rupees to 93 rupees per share. If you look at the business of India Shelter, it is into affordable housing finance company, and 57% of its portfolio comes from the home loan, and the second segment that they have is loan against property, from where the remaining portion comes for the business. If we also look at the segment, the regions that the company focuses on, company is dependent specifically on the tier 2 and tier 3 cities for its business. The company has showcasing strong AUM growth for the last 5 years. The CAGR of AUM growth has been at 38.7%, which is actually stronger than its peers as well. And if you also look at the disbursement ratio, it is also stronger for the company. Now let's talk about the ratios and the peer comparison. Now company is delivering ROA of 4.7% and ROE of 16.4%, again which is stronger than its peers if we compare it with the Aavas Financials and Home First Finance. If we also talk about the asset qualities is healthy, with gross NPAs at 0.92% and net NPAs 0.68%, which is quite lower than the peers again. Again, if we talk about the valuations of the company and if we compare it with its peers, Aptus is trading at 3.8, Home First is again trading at 3.8 times the PB ratio, and Aavas is trading at 2.8 times the PB ratio, whereas India Shelter's current price, if we take the higher band of 493 rupees, the PB ratio will come up to a range of 2.4 times of the PB ratio, which is again attractive for investors. So it will be really interesting to see how the IPO will turn out.
Well, thanks, Gaurav. With this, it's curtains down on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Snehi Shah, and the entire team that put this show together, thank you so much for watching. The market takes the action forward.